Today, Bitcoin and Ether fall the day before the August jobs report drops. The SEC unveils its agenda to revamp crypto regulations, and Galaxy Digital's Alex Thorn and Superstate's Robert Leshner discuss the launch of Galaxy tokenized public shares on Solana. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies fell while stocks rose this morning as traders reacted to a weak private payrolls report and awaited Friday's August jobs numbers. As of noon Eastern, Bitcoin dropped more than 2% to the $109,000 level. Ether fell nearly 4% to $4,300. And Solana's SOL token fell 3.5% to $203. Now, taking a look at a new public listing, American Bitcoin shares dropping more than 21% as of noon Eastern. The Bitcoin miner, co-founded by President Trump's sons Eric and Don Jr., debuted on the NASDAQ yesterday following a merger with Griffin Digital Mining. Now, on its first day of trading as ABTC, the stock closed 16.5% higher. At one point, shares jumped by 110%. You can check out our full interview with Eric Trump and American Bitcoin Executive Chairman Asher Ganoot over at cnbc.com/cryptoworld. Okay, let's talk about the top stories. Today, the SEC unveiled its rulemaking agenda to revamp crypto policies. The Office of Information and Regulatory Affairs released what it's called the Spring 2025 Unified Agenda of Regulatory and Deregulatory Actions, which, quote, reflects that it is a new day at the SEC. Items on the agenda represent the agency's renewed focus on supporting innovation, market efficiency, and more. Now, the agenda covers potential rule revisions for the offer and sale of crypto assets. Those changes would potentially include certain exemptions and safe harbors to help clarify the regulatory framework for crypto assets and provide greater certainty to the overall market. SEC Chair Paul Atkins stressed that a, quote, key priority of his chairmanship is clear rules of the road for the issuance, custody, and trading of crypto assets. He also wants to keep discouraging bad actors from breaking the law. The SEC's agenda would also potentially ease rules that Wall Street has complained are overly burdensome. Next, the U.S. Bank will once again hold crypto for its institutional clients. The bank announced yesterday that it's restarting its crypto custody services, which it originally announced back in 2021, but paused in 2022 amid regulatory uncertainty. But in yesterday's press release, U.S. Bank's Vice Chair of Wealth, Corporate, Commercial, and Institutional Banking said, quote, we're proud that we were one of the first banks to offer cryptocurrency custody for fund and institutional clients back in 2021, and we're excited to resume the service this year. Following greater regulatory clarity, we have expanded our offering to include Bitcoin ETFs, which allows us to provide full service solutions for managers seeking custody and administration services. The U.S. Bank said it's working in partnership with New York Digital Investment Group to offer the revived custody services. All right, for our main story, Galaxy and Superstate teamed up to launch Galaxy tokenized public shares on Solana. Now, yesterday, the two companies announced what they call the first ever tokenization of SEC-registered public equity on a major blockchain. This afternoon, I spoke with Galaxy's head of research, Alex Thorn, and Superstate CEO Robert Leshner about the tokenized stock offering, which is now available to the public. So Galaxy Digital and Superstate announced the tokenization of Galaxy's common stock on the Solana blockchain. This is after Galaxy listed on the NASDAQ earlier this year. Alex, let me start with you, because tokenization has been a major theme within crypto and the mainstreamification of the industry. So talk to me about why this was the time for you to take this step with Superstate.
Yeah, it's been something that technologists and financial people and people in the blockchain industry have wanted to do for the better part of a decade. I think when you see the power of Bitcoin and Ethereum and Solana, the blockchains tracking and facilitating transfers of large amounts of money at this point with ease, right, in a decentralized way, the question has always arisen, what else could you put on these blockchains? And stablecoins, I think, are a great example of an exogenous non-blockchain asset having real product market fit there. But stocks too are effectively digital. They're very similar, and they need this upgrade, right? If you look at the way the traditional financial capital markets are built, the infrastructure, it is just layer upon layer upon layer of things built over decades. This is a much more efficient and simple structure, ultimately, that we think will be widely adopted for that reason. And then, of course, regulatory changes and reforms in the U.S., I think, are a big catalyst for why now is a great time to do this.
And then Robert, talk about what this unlocks for users compared to buying shares on a Robinhood or another platform like that. What should customers expect from this experience?
Yeah, what customers should expect is that the same Galaxy shares that trade on the NASDAQ through a brokerage account like Robinhood are now tokenized on the Solana blockchain using Superstate. These are the same shares. It's not a different asset. It's not a made-up crypto token. These are the official shares of Galaxy. And what they can expect from this is that over time, there's going to increasingly be instant settlement of trading as opposed to T+1, 24/7, 365 trading instead of 9:30 to 4, 5 days a week with a lot of holidays. And the use of these shares of Galaxy and many other issuers over time, finally being able to work inside of DeFi protocols and new use cases that just don't exist today for the stocks that you otherwise own in a brokerage account.
And Alex, I'm also curious, what does Galaxy get out of this equation? You're already listed on the TSX, you just uplisted to the NASDAQ. So what does tokenization of your shares give you?
Well, for one, we think we can reach whole classes of shareholders that may not have access to traditional brokerage accounts. I think that's a general thesis about tokenization that we believe is also true for tokenizing our stock. But we're also a leader in blockchain technologies and services at Galaxy. So it doesn't stop with our stock. The same way I know Robert at Superstate, it doesn't stop with Galaxy stock. We envision an entire ecosystem of tokenized securities emerging, potentially the size or rivaling the traditional capital markets. In fact, there's a view of the future we have that they don't even look materially different. You may not know that you're actually operating on a blockchain with your brokerage firms may start actually using the tokenized versions for various reasons. It could save them enormous amounts of money in record keeping costs and increased efficiency. And then there's programmability of the asset. You can imagine in the future, not that we have one planned or any that I'm aware of or anything like that, but like if a company paid a dividend, they could easily just pay it down through the same exact architecture that is record keeping the ownership of the stock. If you had some sort of corporate action, like a proxy vote, crypto firms and crypto protocols have been pioneering DAO governance models for years, right? So there's an enormous amount of innovation that has been sort of stuck mostly for regulatory reasons inside the crypto only box that we think can overhaul the entire, U.S. traditional capital markets. And Galaxy is a leader in crypto markets, and so we hope that we could be a leader in traditional capital markets if those stocks come onto our rails.
And Robert, you're obviously close to this idea of tokenization through Superstate. What does demand look like for this technology for investors?
Yeah, well, there's tremendous demand, and part of the challenge is meeting the demand that we've seen being built up over a decade. Everyone knows that blockchain rails are going to lead to faster, cheaper, more efficient transactions of every asset class. It started with dollars as stable coins. Right now, it's the tokenization of equities. Eventually, it's going to be all asset classes. There's tremendous pent-up demand. And so the challenge for us is bringing issuers like Galaxy, their stock on chain in a way that more investors have access to more often and in new use cases. And so we see this as just the beginning, and we see a lot more adoption coming ahead.
Now, Alex, there's been some pushback from exchanges around this era of tokenized stocks, particularly of private companies. A group of exchanges got together in recent days and wrote a letter urging global regulators to look into the issue. Now, obviously, Galaxy is publicly traded, but as a company who went through the years-long process of going public in the U.S., I'm curious for your take on the tokenized shares route versus traditional IPO, as in, are tokenized shares a threat to the IPO pipeline?
I don't think they are, but I do think it's very important that issuers themselves be the ones to tokenize their own shares, right? And so whether that is a private issuer or a public issuer, something very important to us. You've seen a lot of other announcements too, like I don't want to name them, but of other tokenized stock things that are really sort of like SPV structures where the issuers have no involvement at all. And instead it's just a third party that's buying the shares of the company, putting them in some, Luxembourgian SPV and then tokenizing the shares of the SPV. And we don't like that structure. We think it, first of all, it doesn't go through US capital markets at all. It doesn't make use of the SEC or follow traditional onshore regulated rules. I think your question about the IPOs is interesting. I think that there will be a form of going public through tokenization that doesn't need to use traditional exchanges. I think that is very clearly going to happen. Whether or not private companies are then public if they tokenize, I think there's some regulatory questions there. But I think, everyone is going to play here. And I think the exchanges need to figure out how they want to play in tokenization, because again, it's not fundamentally different. Like Robert's very correct when he says these are literally GLXY Class A common stock. They're not different shares. It's just different technology, right? And so I think they need to adopt this technology or risk getting left behind, by a wave of innovation.
And Robert, what other publicly traded companies are you speaking to about potentially tokenizing their stock?
Absolutely. Well, we can't speak on behalf of specific issuers until they make their own announcements, but we've seen tremendous demand from issuers, to follow GLXY's footsteps and for their shares to be tokenized on chains. We see issuers wanting this native tokenization model where they bring their shares on chain as opposed to allowing a third party that they have no relationship with to make a derivative or a different, type of exposure without their participation. And so, I think there's going to be quite a few companies that we announce in the coming days and weeks, and we're going to see quite a few new tokenizations of existing public companies traded on the NASDAQ or NYSE coming online on Solana and Ethereum and other blockchains.
So you say tremendous demand, quite a few companies. Are we talking about a dozen? Or are we talking about a lot more interest than that?
I think, the demand is starting with the crypto native and crypto adjacent companies, the companies that are operating in these markets that interface with blockchains, companies like GLXY. These are going to be the first adopters of tokenization. I think it's going to be a while before the rest of the S&P 500 gets there. But as they see the benefits of tokenization, as they see more capital market access, more demand for their stock, more utility for their investors, more efficiency in corporate governance, proxies, dividends, all of these things, eventually every single company in the S&P 500 over time will become tokenized.
Okay, that's all for Crypto World, but we will be back again tomorrow, and we'll see you then.